Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Market Today. Joining us now is Shanti Jain, the Managing Director and Chief Executive Officer of Indian Bank. Welcome, Mr. Jain, to the show. Take us through the key operating highlights of your financial performance. Your net profits are up and the bank is on the path of profitability. Our viewers would like to know some more details about your financial performance.
So you see our business has grown by 11%, right? The deposit has grown by 11% and the advances have grown by 13%. So business by 12%. Under the deposit, we have grown our CASA by 8%. Even in the credit side also, our RAM advances have grown by 14%. And the retail by 15%, agriculture by 19%, MSME by 6% and corporate by 10%. And we could be able to maintain domestic CASA more than 42%. As a result, we could contain our cost. And you see that our net profit has increased by 55% on a QOQ basis and 53% year as a whole. This entire profitability is on the strength of growth in our net interest income, NII, the difference between the interest received and the interest paid. In addition to the growth in NII, there is a growth in non-interest income as well. The treasury profit, fee-based income, recovery in write-off, PSLC commission, forex income. So all our revenue streams are giving us a good results, and as a result, our profitability improved, our ROA has improved, ROE has improved, and the asset quality side also continuously our gross and net NPAs coming down. Our story for recovery more than slippage is continuing from last 2 years or more than that. You see, as a result, gross NPA has come down from 5.95 a year back or a 4.47 in December to 3.95, and the net NPA has come down to 0.43. And you see that collection efficiency is 96%. So in all, bank has done good in all parameters, resulting improvement in profitability year on year as well as on quarter basis.
Absolutely, a good set of numbers there, and the market would like to know what is your outlook as far as maintaining this kind of overall performance, including profitability levels, are concerned.
So the business profitability depends on the business. So we would like to grow between 8 to 10% in the deposit as we have grown last year. Last year we have given guidance of 8 to 10%. In deposit we came out with 11%. In credit also, we have given a target of 10 to 12%. In the advances, we came out with a 13%. So again, around 10 to 12% of credit we will grow, 8 to 10% of our deposit will grow. But we want to have that, we want to grow more in retail. As a result, but our spread is increased, our risk is spread, our margins are improved. So profitability will be there. So we would like to have a good margin, would like to have a CASA above 40% and therefore good profitability. And you see our net NPA has come down 0.43, so credit cost will come down.
Mr. Jain, take our viewers through your current sort of sectoral contribution to the profitability mix and whether you see that sustaining in the near future.
You see our performance on a quarter on quarter from last 3 years. Every quarter we are improving in a performance, whether it is a NII, whether the business. In business also the growth is a widespread. So you go the retail 14%. Under retail, housing growing, auto loan is growing, personal loan is growing. In agriculture also the all sector, whether the production credit, whether the gold loan, the KCC loan, then even the investment credit. In MSME also we are growing. Of course it is 6%, but the standard MSME growth is a 10%. So in all sectors we are growing and maintaining CASA above 40% in a tight liquidity conditions. So because of this and maintaining good asset quality, resulting the improvement in profitability on quarter basis. You see last 4 quarters, last 2 years, even 3 years on a quarter basis.
Mr. Jain, you mentioned about tight liquidity conditions. What is your outlook there? Do you think these conditions are likely to abate or persist in the near term, and what kind of challenges does that throw for you as a bank?
No, but what happens that the you see that deficit in the system is around 70,000 crores rupees. So in that situation, what happens, the interest rate deposit you have to pay slightly higher. For the banks, we have a 5,800 branches. So we have a good deposit franchise. That deposit franchise is helping us to mobilize our CASA. So when at the one side we are giving term deposit rate 7 plus, but we are getting a CASA. So on an average, we are containing our cost around a 5%. And because of the deposit franchise, because of the huge relationship we are having 12, 13 crore customer base. So we are growing in that way.
Mr. Jain, you touched upon this, but I want more details from you as far as non-performing assets are concerned. Gross NPA is down to 3.95% as per the numbers that I have, and net NPA is below 0.5, in fact at 0.43. So recovery seems to be on track. What about any fresh slippages in FY24?
Yeah, you see the FY24, the slippage has come down. In last quarter, slippage is only 1,200 crores. Virtually, you see last quarter in corporate, there is no slippage. Rather, we have recovered from the earlier slippage. Absolutely no slippage in corporate. The slippage has come 600 crore from MSME and around 500 crore from the agri side. In MSME, out of 600 crore, 100 crore is from the restructure book. So basically, slippages are under control. It has come down substantially. But you see collection efficiency, it is 96%. And you see the SMA 1 and SMA 2, it is 0.48%. Hardly any SMA. So the credit quality is good. Slippage has come down, and recovery, we are every quarter we are recovering more than 2,000 crore. At the beginning, we said that we have a recovery of 8,000 crore. We have had a recovery of 8,800 crore.
Mr. Jain, as far as NBFCs are concerned, we've seen what has happened in the recent past. Your bank has also been an active lender in this space, dispersing funds to NBFCs. What's your outlook on that account?
You see your NBFC breakup. Even HFC, all our accounts are having A rated and above. Even 96% of our account are AA and above. Same is the position is in the NBFCs other than HFC. So we are having very good credit quality in NBFCs. And you see the RBI has increased the risk rate. So slightly we have increased the pricing of the NBFCs as well. But they are doing absolutely good. So there is no asset quality issue as on date from these NBFCs.
Mr. Jain, what's your broader sense about how the economy is expected to perform in the current financial year? Do you expect the momentum to sustain? And within the growth mix that we are seeing, what is the most attractive sector according to you which the bank can capitalize on?
So you see the economy is growing. You see the last GDP data and all. And our economy is 2030, we will be double in our economy. So we are growing economy. The income level of the citizens are increasing. The huge opportunities are coming to the banks to fund the retail growth. Even in the economy also, the e-commerce is increasing. So when the e-commerce is increasing, data requirements are increasing. When the data requirements are increasing, there is a huge opportunity for bank to fund the data center. But banks to fund even the LRD of data center. Likewise, in the country, you see there are city gas. It's a new area where the gas is being supplied through pipeline, the huge opportunity. Smart metering is a huge opportunity where because of meters are being changed. There are huge opportunities in renewables. There are huge opportunities in the road sector. There is huge opportunities in the railway sector. So there are lot of opportunities is coming on the way, and as the economy is growing and we are having adequately capitalized and taking the benefit of that growth of economy.
Mr. Jain, do you expect interest rates to remain at elevated levels for the near term, or do you see some respite, at least for the common borrower?
So interest rate, actually, the RBI is based on the CPI inflation between 4 to 6, and we are at between the 4.85 or like this in the CPI inflation. So we think that if the decline will happen, it will happen in the third or fourth quarter of this financial year. Presently, the inflation is within the RBI range. So how the inflation will come out in the time to come, based on that, the interest rate will be decided by the RBI. But as on date, we are taking the deposit at a rate of 6 or 7% by maintaining CASA and growing.
Mr. Jain, the Indian Bank stock has moved from 268 to 573 in the past 1 year. You also declared a dividend of almost 12 rupees. What's your message to your shareholders?
The issue to the shareholders is that they stay invested in the bank, the way bank is growing. You see from last 3 or 4 years, the 125 shares has become 500, 550, or today it is around 530, 40, whatever it be. It is growing. So because it is growing based on the business growth, and we have changed the business mix of the bank, and today we are having 63% RAM. This business mix is giving us a good margins. And now the asset quality challenges, which you see at the time of amalgamation, we started with a gross NPA of 11.40%. Today we are to 3.95. We have started with a net NPA of 4, today is 0.43. So the bank is on a growth path. All cylinders are firing, all business segments are giving good results, and we are having a broad-based credit growth, asset quality in control. So that the good time for the banks, and they should keep invested in the bank.
One final question: to sustain this growth and expansion, are there any fundraising plans that you require?
That fundraising plan actually present my capital adequacy ratio is 16.44. It is against the requirement of 11.5, and you see our generations are adequate to take care of our credit growth. In spite of the 13% credit growth, our capital adequacy is more or less same, rather better from the last year, because in spite of the 57 bips impact because of the RBI guideline, our capital ratio is same. Slight reduction is in Tier 2 because we have paid the subordinate debt, but the core capital of the bank is continuously increasing. So we are adequately capitalized, and the fundraising plan we will discuss in the board and then will come out.
All right, Mr. Jain, thank you very much for your time with us today. Take a look at the Indian Bank share, delivering quite good returns in the past 1 year, and we saw how the stock has moved after the results have been declared. With that, it's a wrap on this conversation. We'll be back with more. Until then, bye.
Thank you.